Ladies and gentlemen, good day and welcome to NMDC Ltd Q4 FY24 earnings conference call hosted by ICICI Securities. As a reminder, all participants' line will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Dixit from ICICI Securities. Thank you, and over to you, Mr. Amit.
Thanks, Tanuja. Good morning, everyone, and thanks for joining the call today. At the outset, I would like to thank the management for giving us an opportunity to host this call. From the management, we have today Mr. Amitabh Mukherjee, Chairman cum Managing Director, Additional Charge and Director Finance. Without much ado, I would invite Mr. Mukherjee for opening remarks, post which we will open the floor for an interactive Q&A session. Over to you, sir.
Good morning. Good morning, everybody. Thank you for joining. I'm pleased to talk to you once again at the results, which have been spectacularly good. The last financial year, both in terms of production and sales, were the highest. They were record-breaking, and of course, because we could not get the Kumaraswamy then, so Kumaraswamy last year, so we were slightly less than our target. But this year, Kumaraswamy sanctions have already come. They are already, all these sanctions have come, but it has come for about 1.5 million ton extra. So this year it will be even better. Our profits were around 19% higher for the quarter, for this quarter as compared to the previous quarter. Now, this is of course leaving out the exceptional item. The last year, if you remember, there was an exceptional item of about 1,000 crores, 990 odd crores for monitoring committee. So if you leave out that exceptional item, our PBT in this quarter has been 19% higher, and in the entire year has been about 30% higher. So these are, I understand, very satisfactory performance. But this current year, we expect to do much better than this and surpass our current best achievement easily. That is what we are looking at. The capex itself was also record-breaking, about 2,100 crores, which is the highest ever if we are giving out the Nagarnar steel plant. Of course, we did 3,700 of 3-4 years back, but of that 3,700, I think more than 2,500 crores was Nagarnar. So, like-to-like basis, the capex was 114% higher than our target and the highest ever. Going forward, we have about 50,000 crores of investment in the pipeline at various stages. Some pending sanctions, some have been sanctioned, some are at tendering stage, and some other stage. So we are on our way to make this company about 100 million ton company in the next 5 to 6 years. Thank you. We can now have our questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Alok Deoria from Motilal Oswal. Please go ahead.
Hi, sir. Good morning and congratulations on pretty decent numbers, especially on the volume front. So, sir, just firstly, if you could indicate now with the sanctions coming, what kind of volumes we are looking at for FY25 and 26?
FY25, our efforts will be to touch now the 50 million ton mark. That is our immediate target to touch this financial year. It will be a tough going, especially because we lost a little bit of production in the month of May due to some unfortunate go-slow by the workforce. So we have lost that, but we'll make this up because this is early in the year. So we've lost about 1 million ton, but that will easily make up. So our target for this year will be to touch across the 50 million ton production. Coming that the Kumaraswamy has come for 1.5 million ton extra. And remember, this year Kumaraswamy, from 8th of February we did not work. In Kumaraswamy we did not work for approximately 20 and approximately 50 days. And that is why the Q4 volumes, if you know, were lower than the last year's Q4 volumes. So 1.5 million ton, we are surely going to get extra there. And from our other mines, we are even in Bacheli, the 2 million ton is now, it has already been commissioned and it has started working. So we expect about 2 million ton extra in Bacheli. And so this year we would be, I think we should be able to touch 50 million ton this year. The year thereafter, the year after that, we will be trying to touch 54. And these are the two targets that we immediately have.
Sure. And this capex, which you are guided for FY25 of around 2,000, that would be largely that number only.
Yes, because most of our big capex projects are in the tendering stage, and where in the first year the expenditure is expected to be lower, but is generally 5 to 10%, because that is basically design, drawing, and equipment purchase payment. Thereafter, it will be, I think, from next year it will really pick up.
Sure. This last question. So there's this news of the employee wage negotiation going on. So what's the update there, and how could the employee cost look up in FY25 and 26?
We are already providing for the, even in this year's account, the provision has been made for the, and even in the previous account, I think it was due from last year, 1st April last year. So we have been continuously making the provision every year. So I don't think there's going to be a major problem there. So I think it's going to be about 100 crores more in staff and cost, approximately. But that will not come as a differential hit, because last year also, this year also, we are providing for that in our account.
So the negotiation is completed or it's still going?
No, it's almost in the penalty stage.
Got it. Thank you so much, sir. I'll come back in the queue if I have more questions. All the best.
Thank you. The next question is from the line of Pallav Agarwal from Antique Stock Broking. Please go ahead.
Yeah, good morning, sir. So just a question on the other expenses. This quarter we saw it was substantially higher on the YOY and on a sequential basis. So are there any provisions for expected credit loss?
Yes,
Or,
Yeah. There was this land in Doni Malai, which was with us since 1968. And when the forest law came in 1980, a part of that became the forest land. So that was never regularized. And we had our infrastructure there. So when we put in the game, so we then applied for regularization of that. So we had to pay 252 crores, 282 crores for that land, which was in our possession, where we had our infrastructure, but was a forest land. So formally it was diverted last year Q4. So that is why we had to pay 282 crores, and that is the big hit that you see in the books.
so that is in Q4, sir. That is in the current quarter, you're saying?
Q4. That was in Q4.
Okay. So the other question was on, I think this time, if I take a look at royalty as a percentage of sales, so it seems on the higher side. So normally is 40% of the sales revenue, normal royalty percentage to take going ahead?
The royalty and additional royalty taken together would be around 40%. In fact, it will be 43%, approximately.
40 to 43%.
That is royalty and additional royalty taken together.
Sure, sir. Sir, lastly, sir, in terms of, what would be the current cash and cash equivalents on the books at the end of FY24?
Gross is 12,000 and net is, I think, 8,900. As on date, it is 9,200. As on 31st March, it was 8,900 net. And as on date, it is 9,200.
Sure, sir. Yeah. Okay. Thank you, sir.
Thank you. The next question is from the line of Vikas Singh from Phillip Capital India. Please go ahead.
Good morning, sir. Sir, in terms of employee provision, can you just give us some idea that what percentage of wage hike you have already provided for in terms of provisions?
I think we're providing, I have to check on that number of, around 10% hike we have been providing, 10-11% hike as compared to the year. We are providing month-on-month basis. Every month.
Understood, sir. So my second question pertains to our target of 50 million tons. Last year also we actually had a little bit of upset in terms of reaching our target. So incrementally, only the Karnataka mine is just giving 1.5 only. So the rest is coming from Chhattisgarh, and do we have the evacuation?
Yeah. We will try and get a little bit from Donimalai. Donimalai last year was 6.1. So we will get at least 0.5 million ton extra from Donimalai. So Karnataka will give us 2 and Chhattisgarh will give us 3 incremental.
Understood, sir. And sir, just one last question. Post the price hike on 27, do we now at par with in terms of adjusted for the export penalty, export duty, or there is still a scope of further price hike?
Export duty is hardly export prices would not really affect unless it is coming down very sharply. Export prices affect us only when it is on a huge downward trend and then when it is raised to the bottom. Or when it is going up, the export prices do not really affect us. But domestically, yes, we are at par on landed cost basis with at par or even at a slightly premium on most of the other domestic suppliers are there from the different markets.
Understood, sir. Thank you. Thank you. That's all for my side, and all the best for future.
Thank you. The next question is from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Yeah, good morning, sir. Sir, my first question is, we have some advances to the NMDC Steel company. So what is the status of that? Any timeline as to when do we expect that to recover?
I think from Q2 of this year, they will start repaying. That is, you see, if you, because I am chairperson and director of that company as well. That company is in line, is proceeding in line to have a break even by Q2. If you see the month-on-month figures, the HRC production right now is at around 120,000 tons per month. We will hit a break, which was about 66,000 in December. So we have almost doubled it by May. So if you see that our hot metal production of 1 million ton, which we turned on 7th of April, is the fastest ever in any PSU. SAIL, for example, did it in 260 days, and RINL did it in about more than 290 days. So even with established steelmakers, we are performing better. So the only problem there is a little bit of dispatch. So once we are doing about 1 to 1.5 rigs a day. The moment we do 2 rigs a day, and we touch around 6,000 to 7,000 both on dispatch and production on per day. So we will start making money. The good news is that when I was there on 24th, we started the PCI, or the pulverized coal injection. And that will lead to a substantial reduction in cost of hot metal. And so taking all scenarios together, that we have touched 120, we need to touch about 150 to start making money. We are already almost there at cash break even. Almost there at cash break even. So I think going forward in Q2, if the trend continues, if we are able to maintain this momentum and solve the few teething problems that are there still, we should break even in Q2, and by Q2 the repayment should start.
Okay, and sir, do we earn any interest on this advances, or is it interest free?
They are not deposits, because deposit or advances will draw what you call the provisions of Article of Section 186. But this is a major part of it is pre-demerger expenses. The expenses between say of the appointed date and the effective date. That 1.5 years, that expenditure, that capex and everything that we did on their behalf, that is as per the scheme of amalgamation. That's around 2,600 crores. The rest of it is for iron ore supplies that we are supplying, which is being given right now on credit. So the rest of it is that around 1,300 crores. So these two will start slowly repaying, I think, by Q2 of the current.
Okay, so sir, not clear. So do we earn interest on this, or it is just pure?
No. We cannot. This is not a deposit, sir.
Okay. Understood. And so this year, given, what is the target for the steel company in terms of overall production, and all the iron ore is being supplied from our Chhattisgarh unit? Mine?
Yeah. Iron ore is being supplied from the Chhattisgarh unit. There is no doubt about that. And we are expecting to do for the entire year around 1.8 to 2 million tons. That is our target. Anything between 1. 2 million tons is minimum that we are looking at. We break even at around, let us say, 1.7 or something.
And the evacuation from the mines to the plant, logistic is not an issue. We have the capacity.
But that is not an issue. All those teething problems within the plant of the wagon triplers, etc., have been solved. Now 95% of the problems have been solved. So the last milestone that was to be done was the PCI, which we have commissioned 3-4 days back. It will take around 15 days to stabilize, 15-20 days, and then we will do the TRT, top recovery turbine, which will lead us again a saving of about 100 crores a month on electricity, because we will be generating about, I think, 15-16 megawatts out of the top recovery turbine.
Understood. Sir, one question on this royalty. You clarified 43% odd. This quarter it's around 47. So is it because of some lead lag in IBM prices? Should we kind of build in 42, 43 only for the coming quarter?
There is no time lag, I think. Why is it 47%? The previous year's time lag was taken care of in this year, because we started the integrated pricing. So a little bit of previous year outstanding. Right now there is no more time lag. The previous year's areas will also have to be done this year. So that is what.
Understood. All right, that's it from my side. All the best, sir.
Thank you. The next question is from the line of Natraj Sankar from DSP Mutual Fund. Please go ahead.
Hi, thanks for the opportunity. I just wanted to ask over the longer term couple of years, as we ramp up the capacity of the steel plant, what is the kind of EBITDA per ton would one should visualize as the capacity ramps up beyond the 2 million tons? Thanks.
Beyond 2 million tons, the EBITDA margin would not be very high. It should be around the 10% range. But once we do 2.5 to 2.6, that is the third stage of our ramp up. Then the EBITDA margin should be more than around, should be on the current price level, it should be around 25%. On the current price level of both the iron ore and the steel. As the steel market moves up, we can, but that is at around 90% capacity place.
Understood. And the second part is, I know it's too early to ask for a capacity expansion or any thoughts on that, but
no, let us plan to walk, then we'll run.
Okay, understood. Thank you so much. Have a good day.
Thank you.
Thank you. The next question is from the line of Anant Mudra from My Temple Capital. Please go ahead.
Hello. Yeah, thank you for the opportunity. Sir, last year somewhere you alluded that we'll start working in 3 shifts in Chhattisgarh, and then we'll also have the benefit of the rail wagon loading system at Kirandul and the new screening plant at Bacheli. However, if I look at the April production numbers, they have declined year on year. So what explains that for Chhattisgarh?
I think April was slightly more than last year, but the 3 things that you have mentioned, 3-shift working, we are ready with equipment, etc., but we need to recruit about 800 people. So that recruitment process is on. It should take another 6 months to get recruited. So we have not been able to start. We have started the 3rd shift. The 3rd shift in 11C, which was not there, it has already started. So that 3rd shift has already started. But we have not been able to work the 7-day week. There's still a Wednesday holiday today, for example, a holiday there. The second thing is RWLS has been commissioned. It is being calibrated. Trial runs are on. And I think another 10-15 days, we should be able to utilize it fully. So that's commissioned, that's working. We are loading already. But so every time we are already doing more rakes. And the 3rd thing is even at Bacheli, the additional 2 million line has already been commissioned. That has been commissioned late last year. We could not take much benefit of that last year. It was commissioned, I think, in January end, and around February it was being stabilized. So this year we will get the full benefit of that.
All right, sir. And sir, you also alluded initially in your initial remarks that we are planning a capex of about 50,000 crores to double our capacity over the next 5-6 years. If I look at the current gross block, it's should be about 5,000, 6,000 crores. So a 50,000 crore investment is, I mean, can you please give us some kind of a breakup from where will the capex go and where will the...
I can give you the big number at the high level. So we already have a tender, SP2 tender has been awarded for around 1,000 crores. Another 200 crores, 300 crores for the tailing dam there. So that will be 3,300 crores. The downhill conveyor and new crushing plant at deposit 14 is another 1,500 crores. So that's 3,000 crores. Deposit 5, where we are planning again a new crusher and a complete new set of conveyors coming in for that. That will be around 2,000 crores, so that's 5,000 crores. The Strive pipeline phase 2 from Nagarnath to Vizag would be around 10,000 crores. That's 15,000 crores. The phase 3, which is between Kirandul and this place, what do you call? Kirandul and Bacheli, that will be another 3,000 crores. So that's 18,000 crores. Our new pellet plant, because if you get about 10 million tons of slurry at Vizag, so that will cost you at least another 2,000 crores. So that will be 20,000 crores. And then we plan to have at least 4 or 5 stockyards. One at Vizag, and at other places, which we had BCG and McKinsey and Deloitte all 3 going on the question of our distribution network. So the distribution network, which includes slurry pipeline even to Raipur for another 7,000 to 8,000 crores and a few stockyards would be around each costing about 2,000 crores, so would be around 8,000 to 10,000 crores. Also, RWLS, we have to plan around at least 10 RWLS in our Chhattisgarh area. So at 50 crores each, this is at around 500 crores. And then the one major thing that equipment, we are ordering this year around 500 crores, 400 crores, 500 crores of equipment this year itself. And next 2 years, we have to order around 400 and 500 crores for equipment. Our digitization journey, including the ICCC, would take us around another 500 crores. And then those previous quarters, etc., which we need for our extra staff, would take us another 1,000 crores. We have to build a new township at Kirandur and other things. So if you add all of these up at the high level, so they come up to around 50,000.
Okay. And so where will the increased production come from? Mainly from which mines? Will we commercialize new mines, or it's going to be from the existing mines, or a combination?
I think is that Karnataka sector in the long term will be 17 to 20 million tons. We have already got 1.5. We will restart process for another 1.5. Right? So that's going to be one. Around Karnataka sector would be approximately, let's take 17. So that's around 70, more than 80 should come from Bailadila. We are planning around 35 of expansion at Kirandur and another, I think, 30 at Bacheli, 30 or 35 at Bacheli. So that's 65. Deposit 4 and deposit 13, if we are to operationalize, that should be around, the peak rated capacity is 13 plus 7, 20. And our share of that would be 10, approximately 50% would be 10. So that is expected to give us another 10 for the 65 and 10, 75. For the rest, we'll have to buy up some mines from that. We'll have to look at the mines. So that's approximately 100, around 75 from Bailadila, 75 to 80 from Bailadila, and around 17 from Karnataka.
All right, sir. That's it from my end. Thank you, sir. Thank you so much.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants, please limit your questions to 2 per participant. Should you have a follow-up questions, we will request you to rejoin the queue. The next question is from the line of Pramod Dangi from Unifi Investment Management. Please go ahead.
Yeah, thanks and congratulations, Mr. Mukherjee and team. So there are 2 questions. On the pellet plant, we are still making losses, and I think we are doing some more capex. So what is our timeline, or what is our thought process on that? When we will break even? And
we are following a 2-pronged strategy at the pellet plant. Thankfully, our this year there has been a cash break even, but that's not satisfactory enough. We need to run the plant at full capacity. That 282 crores that I said that we had paid for regularization included the area of tailing pond. So the tailing pond, if you remember, the pellet plant is designed to have 85% tailing, to which we did not have any access till date. Only now, after paying that 282 crores, we have now that access. We need a few more permissions to start using that tailing. So if we start using that tailing, our tailing circuit, which is 85% of the plant capacity, will start working. So that's one good thing. The second thing is, parallelly, we have quoted an EOI for running the pellet plant on a revenue share basis. So we have received some responses. We are talking to them, and then we'll float an RFP. So hopefully, somewhere around November, December, will be, if that route gets successful, then we will be able to run it with private participation. There's about 100 crores of capex that needs to be done, basically on filter presses and some grinding circuit. So either we'll do it, or if we give it on due basis, then the party will. So both the strategies are being pursued simultaneously. Okay.
And secondly, as you said, target is to go to 50 million this year, the 54 million next year. How our capex is going on into the railway and the slurry pipeline on the evacuation capacity this year, and when they will come on stream? And do we already have that EC in place for this expansion?
Yes, EC we have up to 54 now. No, not 54. We have up to 53 because Kumar Swamy was given 1.5 extra. So we have now. Previously we had 51.8. Now, if you add 1.5, it will be around 52, so 53.3 or something. That is our EC capacity. Next year, of course, hopefully, we are going to restart the application process for taking Kumaraswamy to 10 million ton if we get it. So we are saying that we'll be able to get EC of 54 next year. We have already applied for enhanced EC and deposit 14 and things. The deposit 14 for which public hearing has already been held, and we expect to get that. That is an enhancement of 5 million ton and plus another 5 million ton we have applied. So these are the process. We hope to get them definitely by next year. This year at any given point of time we get it. The difficult things of public hearing etc. has been already been done, and it is in the process. It has been sent to MOEF. So I think we should be able to get that. And what was your second question, please?
Evacuation capacity. We are doing the expansion of the line in the slurry.
So the pipeline, the laying work is going on, I think, fairly satisfactorily. A pellet plant and beneficiation plant, we had stopped work for 6 months, and we are just restarting. For last 6 months, we took in principle decision that 2 million ton pellet plant should be upgradable to 6 million ton. So we stopped all the construction at the beneficiation end at Bacheli and the pellet plant end at Nagarna because we wanted the facilities to be common. We did not want a 2 million ton pellet plant and 4 million ton pellet plant in the same boundary. We wanted a single 6 million ton pellet plant as and when we require them. So all the common facilities now are being designed for common sizing and common facilities. So that took us for completely redesigning the entire layout, and that 6 months we have not worked. So accordingly, the project has been delayed, but it will give us long-term benefits in terms of additional fueling. So the pellet plant had only LPO as fuel. Now we will have multiple fueling, including coal tar, and if required, coal gasification. So that is substantially going to reduce our fuel cost. And this additional fueling arrangement was not there in the original design. So we have corrected all of them in the head of Bacheli, the grinding plant. We have already given the change order to our contractor. In the tail end where the pellet plant is being made, we will be giving the change order within this week. So the work will now fully resume, and by the end of next year, next current year, I think, next December 2025, we should be able to commission the entire system. Railway line, it is progressing. I think around 10-15 kilometers are left. Railways have promised us that they will do it by, I think, July or August, somewhere around August they have done. But there is a particular stretch which is problematic. I think up to Kirandur it has been, the railway is doing it. I think another 6 months we should be able to get the entire doubling of Tiki line done.
Okay, yeah, great. And then lastly, if I can ask on the dividend payout ratio, this year it is around 45%. And with the cash in the balance sheet and the money which will come from the NMDC still, are we looking to increase the payout ratio, or it will remain around 40-45%?
No, we have this year we paid 37.5% of our net profit, 38% of our net profit this year we have paid. Because we have a lot of capex now lined up. We have a huge amount of capex lined up, as I was saying in the previous question. Mm-hmm. So, time that for the next 4-5 years, I don't think capex more than this can be. Dividend more than this, it will be prudent to there. But that is a call that board will take apparently. Subsequently, I cannot preempt the board. But I think at 38% payout with this capex there, I think saving a little bit of cash would be advisable.
Sure. Thanks, Tom.
Thank you. The next question is from the line of Kirtan Mehta from BOB Capital Market. Please go ahead.
Thank you, sir, for this opportunity. We have lined up a very huge growth targets, and you just elaborated on a breakup of the 50,000 crore of capex. In terms of sort of taking the approval for this, I presume we'll be doing in some sort of packages. So, what would be the first package that we will be lining up? Would you also sort of give us timeline on when will we take the approval on this capex?
So, few of the approvals have already been taken. At least 3 to 4 to 5,000 crores we have already taken. Our target for this year is to ensure that all the approvals are taken from the competent authority, whether it is board or whether it is the committee of directors. We are planning, most of these are at DPR stages. DPR, various agencies are making this DPR and etc. and other things. So our target this financial year is to definitely take all the approvals for at least 40 out of the 50,000 crores and at least tender out 15 to 20,000 crores of the 40,000 crores sanctions. So that is our target, immediate target this year.
Understood, sir. And what would be the peak capex that we envisage over the next 3-4 years? Annual peak capex?
Peak capex should be, if I take 50,000 crores over 5 years, peak capex should be reaching 7,000 to 8,000 crores in, I think, year after next. Year after next 2-3 years, we should be at the 8,000, 9,000 crores mark.
Right, sir. One more question was on the NMDC Steel. I believe we mentioned that we could achieve 25% EBITDA margin when the plant reaches 90% capacity utilization at current prices. Does it mean that are we guiding for a EBITDA per ton of around 12,000 to 13,000 rupees per ton under the current configuration?
Yeah, I think it should be, that should be possible because you see, this is a very energy efficient plant. It's a continuous process. So there is no heat loss. So to that extent, the energy steel business is what? 1/3 about 40% is coal, 20% is iron ore, and around 25% is energy cost. So this is a very energy efficient plant because we don't cool it down and then reheat it and all those things. So it is likely to have a very, very efficient working. And in terms of manpower also, this is a very lean company and we plan to keep it that way because that's another cost which the PSUs have had. Actually, the manpower cost. So both on manpower and energy should be seen. The blast furnace itself is very, very efficient. This is one of the biggest blast furnace, and the bigger the blast furnace it is, the more efficient it is, the more cheaper it is. Now we have got the PCI, so we'll have a coke rate and fuel rate, which will be one of the lowest when we do to 90%. And we have the TRT and others, so our energy consumption would further go down. So we hope that we are very confident that this will be one of the most efficiently run plants. So under that circumstances, 25% EBITDA should be possible.
Thank you, sir. Thank you for this color.
Thank you. The next question is from the line of Rashi from Citigroup. Please go ahead.
Thank you. Just on your capex, in FY25, you say it was going to be 15,000 or 2,000? I missed that.
It will not be 15,000. It will be around 2.5.
Yeah, 2,500.
2,000.
Yeah, okay. And have you, you mentioned that the recovery would start from NMDC Steel in the second quarter. Are you talking about the 2,500 or 25 billion non-interest bearing intercorporate outstanding? That's the recovery that's going to start?
That's going to start as well as the outstanding for the iron ore supply will also go to start.
And that was the 1,300?
Yeah, that's presently at 1,300.
At 30.
1,308.
Okay. And did you recover the entire amount from the monitoring committee?
No, we have recovered out of the 3,000 outstanding. We have recovered 998 crores. About, let us say, about 1,000 crores. We have recovered. Another 1,892 is due. That we are still fighting in Supreme Court. The first judgment was against us. We have asked for a review judgment.
All right. Then on the coming back to the volumes, you are targeting 50 million tons in this year and 54 million tons in FY26. And Kumaraswamy is 1.5 million incremental and another 3 million tons coming from Chhattisgarh. So the from a end use perspective, one is going to be NMDC Steel that's going to take up the incremental volume. Where else are you expecting the volumes to go?
All customers are absolutely willing to take as much as we produce. JSPL has been asking for, we've not been able to provide JSPL what they are asking. Even JSW, we are fulfilling not more than 60% of their demand. RI then they're fulfilling around 70 to 80% of the demand. And when we what we call NSL, when we ramp up, that's going to cost us more. In fact, I would love to produce 10 million ton extra and people would consume it immediately.
Understand. And the 100 million target is by when, you said?
Around FY30-31. That's calendar year 30. Once all these CapEx that we are planning, this year we will be actually sanctioning and tendering out, and by next year all the tendering will be over. Then I take 3 to 4 years of execution. So all this CapEx would be ready to use by around calendar year 30. So that's the time when the benefits of these CapEx, which are all directed towards the 100 million ton thing, would be done.
Understood. And just lastly on
Ms.
pricing,
Rashi, I request you to rejoin the queue for your follow-up questions.
okay, no problem.
Thank you. The next question is from the line of Satyadeep Jain from Ambit Capital. Please go ahead.
Hi, thank you. So first of all, you mentioned something about slurry pipeline to the NMDC Steel plant. Just wanted to check what's the status and want to understand the economics of that slurry pipeline. How do you realize NMDC value from that pipeline when you sell to NMDC Steel?
The pricing of the pellets, you see, we are going to sell and make pellets out of that slurry. The concentrate is not being sold. We are going to sell pellets, and that is to be an arm's length transaction. So naturally, the value add for the NMDC will be easily realizing value add, because if you know that slurry is the cheapest mode of transport of it is at least simply on transportation terms, it is 30 to 40%, if not more cheaper. I think almost 50% cheaper, that is including 50% of grinding costs and everything, around 40 to 45%. So you'll be able to make cheaper pellets and realize even more. And now that we have got dual fuel arrangement in the making of the pellets, our cost of manufacturing will be much lower. And because it will be an arm's length market price, so I think NMDC for that it will be a very positive realization and a positive ROI for the slurry pipeline system.
Just wanted to understand on that freight. So let's say NMDC Steel right now is procuring iron ore from Bacheli by truck. So it will continue to pay the same delivered cost of iron ore that it is paying right now, and the whatever freight savings are there, NMDC will take that freight savings.
It will be charging pellets, and the pellets would be slightly more than the lumps. But the benefit of using pellets are there in the blast furnace. So NMDC Steel will be buying. So to that extent, the pellets will be more expensive than the fines that they are buying today. But the use of pellets is more efficient in the blast furnace, and it will realize more value out of it. So there will be a mix of pellets and sinter and lumps that will be charged as burden to the blast furnace. So the right mix NSL has to go, NMDC Steel Limited has to work out. But obviously, the prices of pellets will be much more than the delivered cost of fines. But whatever fines and sinters is replaced by pellets, the efficiency goes up, the blast furnace goes up, and accordingly the money comes out of efficiencies and not out of cheaper raw material that is put in the blast furnace.
Okay. On the NMDC steel plant, I didn't get the volumes for this quarter, but just wanted to understand what is the pricing that you're getting in the market? Are you able to get the same pricing as some of the other private players are getting for the steel? Who are the customers? Just wanted to get.
The volume for this quarter was around, HRC was around 3 lakh tons, 2,38,000 tons, which is above, and the previous quarter was about 1,80,000, so it's a substantial growth. Of course, this month, I think April we did again 1,06,000, and May we are doing about 1,20,000. So 220 will always be in Q1 already done, and another 120 or 30, so around 3,50,000 this quarter we should be able to do Q1. So that is the volume guidance so far as we are with the NMDC steel. What was the second part of the question?
Just wanted to understand who are the customers? Are you able to get the same pricing as?
Oh yes, the customers, the pricing, unfortunately, because in the ramp-up period, made to order stock, made to order production is less, where the margins are higher. The average price realization has been around more than 49,000. We would like that to go up to around 49,200 actually. So we'd like that to go up to around 51,000, around 2,000. That will be possible when we increase our share of made to order. We have been talking to OEMs. We have got a few trial orders from major OEMs, including Tarantara, etc. We have produced, I think on 24th, the first time LPG grade steel. So the higher grade steels we produce, the higher margins would be. Remember, 49,200 is by producing only vanilla grades of 2062 and 10748. So essentially, we have been producing just to ramp up the volumes, so that the blast furnace works correctly on the vanilla grade. The more OEM and the more high-end things that we do, we'll start realizing more margins. We have an inherent disadvantage. We have two inherent disadvantages. One is that we do not have any stock yards or stockists anywhere, and hence all our sale is X works, X plant, which is no other steel plant does it. Second is that we are located remotely, where the cost of transportation to customers is substantially higher than a lot of than all the other plants. So accordingly, our net realization has to be slightly lower. But then the second thing, we cannot do anything about it, because a geographical location is a geographical location. I cannot move my plant. But regarding the first part of holding on and having stockyards, etc., we are exploring the possibilities for that.
Okay, thank you, and wish you all the best.
Thank you. The next question is from the line of Siddharth Gadekar from Equirus. Please go ahead.
Hi. So first on the volume, you have guided for 50 million tons for FY25. So how should we look at the volume growth for 26 and 27, given that we would have some capacity constraints?
So NMDC, this year we are planning 50 million ton, as I said. Next year we should be targeting around 53, 54 for 20. FY27 we haven't taken a call. We'll have to get back to the drawing board. But this year it is 50. Next year it is around 54.
So, but beyond FY23, do we have the capacities to increase volume, or we will have to wait for some approvals to come in before we ramp up volume?
Not only the approvals, the approvals are on all on way. That is not a problem. The capex needs to be. We'll have to, as and when the capex starts fructifying, so our production will keep on increasing. But the big bang jump will come around FY29 or FY30 or FY31.
Okay. So secondly, in terms of our capex, this year we are targeting 2,000 to 2,500 crore capex. How should we look at the capex beyond FY25 on our per annum basis?
Total capex of around 50,000. We are now pursuing for a land parcel at what we are not accounting for in this is a land parcel of around 1,500 crores in Vizag. About 1,000 acres we want there because we have to terminate our slurry pipeline, build a blending yard there, build a pellet plant there. So we are looking for about 1,000 acres of land in Vizag, but that is going to cost us around 1,500 crores. So if we include that, then our capex for this year would be around 3,500 crores. If we are going to strike a deal for the land, then 2,000 in plant machinery and other contracts and around 1,500 in land. So that would be substantial, 3,500 this year itself. And going forward, if I take the 50,000 crore capex plan, then the peak would be around 8,000 to 9,000 in the third year or the third, fourth, fifth year. It should be 8,000 to 9,000 crores each.
Okay. Now got it. Thank you.
Thank you. The next question is from the line of Bhavesh Patel from Patel Investments. Please go ahead.
Thank you for the opportunity and congratulations on great set of performance numbers for the last year. My question is, number one, what benefit will NMDC receive being the distributor and stockist for NMDC Steel, and will that start accruing in the next couple of years itself, or it is going to take time?
We plan to do it as soon as possible. It is a win-win situation for both of us. You see, I have a cash, as I said, of 9,200 crores as of now. And my deployment in the stock would not be more than 500 crores. I am earning around 8% of bank interest on this. And this is likely to give me a return of around not less than 40 to 15%. So that is the minimum that's going to. For NSL, the benefit is that the evacuation would improve, which would improve the production, because NSL has a stocking capacity of only 85,000, which is 15 days of production. 15 days of production. So we have a regular evacuation, and hence our production can increase. Here, I think the basic calculation is that we can have a delta of the landed cost in Hyderabad and Vizag, from where we can do the entire south, including Chennai market where we can touch, and the Andhra market and the Hyderabad market. We can have a delta of not less than 2,000 to 3,000 per ton, which will be shared back substantially with NSL also. So it is a win-win situation for both of us. Otherwise, what happens is that once we produce more, we have to make some distress sales in the trade. And that amount of distress sales, because we don't have any other stockyards or any other thing, and we have only limited capacity in NSL. So this would be a great sort of win-win situation for both the companies.
Okay, thank you on that. Now with the overall increasing capacity in terms of production as well as upcoming capex plan, do we expect increasing profit, and because of that, increasing absolute dividend amount? I read earlier you mentioned about 38% dividend payout, but overall as a company, do we expect increasing dividend in terms of absolute number going ahead?
I think we've been consistently paying around 45% every year, 40 to 45% every year. So this 38% is almost in line with the 40 to 45% payout every year. That is what the board takes a call on that. But I think this sort of a dividend payout, yes, in absolute numbers it will increase because substantially our profits are going to increase. If you see, we have taken 2 price hikes in the last 2 months. We expect the market to remain buoyant because our demand for our material is skyrocketing. We are unable to produce, we are unable to satisfy our customers with the quantity they demand, whether it is JSW, whether it is JSPL, whether it is ArcelorMittal, whether it is RINL, whether it is all our big customers are demanding much more from us, and so I don't think the demand is ever a problem. The prices, thankfully, are on the upswing, and we expect that to remain, and accordingly with the increased production, we expect substantial increase in profits in this financial year. So even if the payout ratio is the same in absolute terms, it will I think it will be substantially beneficial to the shareholders.
Sure. Thank you and all the very best.
Thank you. The next question is from the line of Kamlesh Jain from Lotus Asset Managers. Please go ahead.
Yeah, thanks for the opportunity. So just one question on the part of your balance sheet. Like roughly around 1,700 odd crore increase has been there in the debtors and a similar increase on our borrowings as well. So what accounting treatment has changed, or what is the change which we have done in this particular quarter?
This actually happened. I'll tell you this. You see, with Horizon, we have an arrangement for bill discounting. So once we discounted the bill, we did not show it as a debtor, and we showed it rather as a contingent liability in the previous year. So this year, there was advisory from the Institute of Chartered Accountants of India in a different case. So they said, no, you'll have to show it to the liability and corresponding as a debtors also, you cannot show it as a contingent liability. So accordingly, we have to restate last year, and accordingly this year has also been restated. It is just as per the latest guidelines of the Institute of Chartered Accountants of India.
Okay. And sir, secondly, on the advance amount which we have paid 640 crore for that land in Karnataka for that steel plant which we were earlier pursuing. So now what will be the, like what we are going to do with that particular land, because already the steel plant in Naganar is on divestment. So what we are going
land
to do?
Already in our possession. So that's one good thing, and it's a beautiful piece of land, almost as big as parcel, almost 3,000 crores, as big a parcel as it is in Naganar. It's a flat land, completely fenced, road on one side, railway on the other, water available, fantastic piece of land. It's just that we haven't taken a call on what to do with that land. So now that we have decided not to build more steel plants on an NMDC, we have engaged a few consultants to see how best the land can be utilized. That's a fantastic piece of land, but unfortunately, or rather very deliberately, we have had a policy of not making more steel plants after Naganar. So that now we are left with finding out alternatives. We haven't found one as yet. We have engaged some consultants to advise us what can be the basic other things. Maybe we can build a welding yard. Maybe there are immense possibilities, but we'll have to take a call on that. As of date, we don't have a specific plan for approved plan.
Okay. And so lastly, on the slurry pipeline and doubling of the rail line. So what is the exact status? How much, like say, is the entire, like say, the capex modules have been ordered, or still some there places still to be ordered? What is the exact status of
in phase one, everything has been ordered and everything is under execution. As I had told earlier, that out of 151 kilometers, more than 80 kilometers has already been laid. Another 20-30 kilometers has already been, the pipe stringing has been done. It has not been lowered. Around 75-80 kilometers has been done. So that pipeline laying part is completely progressing very fast. And as I had said in an earlier question, that the beneficiation plant of the pipeline at Bacheli and the pellet plant at the tail end at Naganar, we had stopped the work deliberately for the last 6 months because of multi-fueling arrangement and common sizing of the equipment when we enhanced capacity from 2 to 6 million ton and creating common facilities and common fueling arrangement. So that decision now has been taken, and all those drawings have been revised. One, we have already in Bacheli, we have already given the change order to the contractor who has already restarted his work. And in pellet plant, we will be able to restart the work, I think, in a month's time, 15 days a month, because we are negotiating with the contractor regarding the exact change of scope and their financial implications.
And doubling of railway lines?
So that's almost also done. About, I think, out of 130, 120 odd kilometers have already been commissioned. 2 sections of 2.5 sections are still left. Railways have assured us that they will be doing it by July, I think September, I think. Yeah? And January 25. They said. One particular section is a little tricky one. It's in it's near Bacheli, so that's the question of health and there's a question of LWE also there. But July, I think we'll get more, July and September we'll get 2 more sections and the final section will come out, I think, somewhere around December, January.
Okay. And lastly, if I may.
Sorry to interrupt, Mr. Kamlesh, I request you to rejoin the queue. Thank you. The next question is from the line of Kunal Kothari from Centrum Broking. Please go ahead.
Yeah, thank you for the opportunity. Sir, my first question is in regard to the overall demand supply scenario for the iron ore in India. So, from current level of the iron ore production, how much you see the volume will be add on in FY25, and compared to that, how much will be the India demand, and also added to that for the incremental volume addition expectation for FY25, what will be the share of NMDC?
This year, the production of iron ore was around 279 or 280 million tons, of which we did around 45 million tons, so that was 18%. Of course, out of this 279, around 56 million tons was exported. So the net domestic consumption after import was around 240 million tons. I think going forward with the capacity expansions, NSL would be there and a lot of steel parts are coming. So I think at least another 10-15 million ton consumption domestically will increase. 15 to 20 million ton would increase in FY25. Of course, the production is likely to be around another 290 million ton, of which we will do around 50. So that our market share will remain approximately the same at 18%.
Because according to my knowledge, even OMC is adding up the capacity. So I think they have reached the EC limit to add up the capacity of around 6 million ton. So that will also flow in, add up in the overall volume in FY25. So
that's this year it was 279. We are looking at around 295 next year. So 6 to 7 at OMC, 5 to 6 for us. So these are the two major things that would come, and the rest would come from the routers, and especially now Lloyd is doing pretty well, so Lloyd will come with another 5. So that's how we are looking at around 15 more, 15, 20. 3 big players are OMC, Lloyd, and us.
And also maybe some steel companies captive mining may also increase in FY25. So do you see, compared to the overall iron ore demand increasing in FY25, the overall supply for the iron ore will be much higher?
No, so I think there is a lot of latent capacity out there that can be, because if I go for my demand only, I will have to take a deep dive on the demand of others. So far as my demand is concerned, I think the demand there is good enough for us to service up to 60 million ton as of date. If I were to service all the customers as per their demand, which is even if I leave the major customers like JSW, JSPL, ArcelorMittal, and RIUN and NSL and QICL, their cumulative demand, I think we are able today to satisfy around 70 to 75% only, and another 25% we haven't hidden demand. So far as our production is concerned, even at 60 million ton, we'll be able to happily dispatch all our products easily. Odisha is a different ballgame, that deep dive has to be made there.
Okay. So my second question is on the export side. At India level, we have done fantastically around 48 to 50 million ton in FY24. What is the overall outlook in FY24?
My guess is around 36, 37 million ton of exports this year, mostly low grade.
Okay. So additional compared to FY24, what we exported around 13 to 15 million ton will flow now to the Indian domestic market additionally for FY25?
No, I think that is not be required because of the production ramp up that OFC, us and Lloyds are planning.
Okay. And anything we are working towards the export opportunity, sir, that we can think
No, we'll have to see where it is, because today also the realization from net tax basis in export in lump is about less by 1,400 rupees. As per price, it is less by around 1,200 rupees. So, even as of date, it does not make a strategic sense, economic sense to export. Yes, as a matter of strategic sense, we'll have to take a call when we reach a particular level of production. But as of now, purely on the economics, purely on the math and what is the net realization, it doesn't make an economic case for export.
So largely.
Sorry to interrupt, Mr. Kunal. I request you to rejoin the queue for your follow-up questions. Thank you. Due to time constraint, that will be the last question for the day. I will now like to hand the conference over to Mr. Amit Dixit from ICICI Securities for closing comment. Over to you, sir.
Yeah, thanks everyone for attending the call today. I would also like to thank the management for sparing their valuable time and patiently answering the query. I will now invite Mr. Mukherjee for closing remarks. Over to you, sir.
First of all, thank you all for joining. This financial year was an action-packed year where we commissioned the steel plant, we ramped up our production, and a lot of indices. We rearranged our company, having a complete new vertical for project execution, etc., etc. So this was a very, very extremely happening year, and we hope that the next year would be even more action-packed, and the benefits of what we have done this year would accrue to the coming year. We plan to take both the companies, NMDC and NSL, to the next level, and we are. It's not an ad hoc plan. We have a blueprint for making both these companies go to the next level. And as it is on a lot of performance parameters, both the companies are the best in the class. NMDC, for example, in terms of cost of production, in terms of a lot of energy consumption per ton, and a lot of our ranking in various ESG things are best in not only in the country but comparable, better than the big ones in the international market also. Similarly, NSL, despite being a very new company, has reached landmarks which we are proud of. For example, obviously rolling out the hot metal from the date of hot metal to HRC at 9 days, which is an India record. Similarly, achieving 1 million ton of total production, 1 million ton of total hot metal in 226 days, which is again one of the fastest. So we are pretty bullish about the current financial year and the next. We hope that the records are meant to be broken and we create a new set of records again here, which we will again confidently break again in the next year. Thank you so much.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.